Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Thursday and we have our regular Thursday guest, David Kuo, founder of The Smart Investor, on our show today. David, great to have you as always.
Hey, selamat tengah hari, Brian.
Selamat tengah hari. Now, I'm going to come back to you and get your insights as soon as we get through the numbers around cryptocurrencies and regional stock markets. We start with Bitcoin. It's at 18,673. It's down 1.73%. Ethereum is at 1,262. It's down 5.65%. Looking across the regional stock markets, we'll start close to home with you with the Straits Times Index. It's down 0.41%. Bursa Malaysia, the KLSC, is down 0.15%. Shanghai is down 0.31%. The ASX All Ordinaries is unchanged. The Nikkei is down 0.57%. The Hang Seng is down 1.88%. And rounding up the numbers, we've got the Kospi, which is down 1.01%. So, David, it's a sea of red across the region. Why is that?
Hey, I tell you what, Brian, I think I might submit a request to have my broadcasting days move to something a bit happier. I always seem to get those days when the stock markets are on the way down. People must be relating me with down markets all the time, but it has nothing to do with me whatsoever. It just so happens that we had the Fed interest rate meeting last night, and they raised the Fed fund rate by 0.75%. And that is sending shockwaves around the world, not just because they increased interest rates, but because Chairman Powell said there is going to be more pain to come. He kind of apologized and he said, I'm sorry it's going to be painful, but unfortunately, without any pain, there is going to be no gain. So it's not working unless it's hurting. And so he says there's going to be a lot more hurt around. And he also said that there are going to be even larger, he said there will be larger rate increases going forward. So I think that is really shocking people somewhat.
But in a lot of ways, if you look at what's been uttered previously in the numbers, the 75 basis point increase was pretty much baked in. But we have a situation, David, now where Treasury yields 2 years are above 4.1%. So that's the highest level since 2007. How is this going to impact Asian investors now? What lens should we put on?
Well, I think we're already seeing it. We're already seeing asset prices coming down. And at the risk of repeating myself over and over again, interest rates are like gravity on asset prices. You already mentioned at the top of the show, Bitcoin's at 18,000. It wasn't that long ago when you and I were talking about Bitcoin's at 20,000. Now it's 18,000. Ethereum's coming down. And of course, we're seeing stock markets coming down, not just in the US, down about sort of 500 points last night, but certainly over here in Asia. So those interest rate increases are going to act like a heavy load on asset prices. Is going to bring down asset prices. And as a result of that, people will be in for a period of pain. But at the same time, what we need to remember is that if the Fed doesn't increase interest rates, then of course, it will allow inflation to run rife. And if inflation runs rife, well, some people might say that is better than asset prices coming down, but unfortunately it isn't. It is a hidden tax on your and my income. And so whatever money we have, if they don't control inflation, we're just going to be paying 10% more at the end of the year. So they either control inflation or somehow, they do nothing, which is what some people are hoping. And that is going to be some kind of delayed reaction to what is going to be happening to the money in our pockets. So we're going to lose either way, Brian. So I'd much rather lose now than to lose later on.
But David, the rhetoric that's also now being played out is the fact that this is going to we need to steel ourselves. That is, this is going to be higher for longer. Now, what are your thoughts on that, and how should we what should we take in order to protect ourselves from this basically interest rate regime that is set to rise?
Well, it's in our own hands now, Brian. I mean, we are in control of our own destiny. Sure, we know what the Fed is going to do. And we also know what certain central banks, with the exception of China and Japan, what they are going to do also. In other words, they're going to be increasing interest rates. So wherever you are, I mean, I saw today that the Hong Kong Monetary Authority is raising its prime rate. So, I mean, they're increasing interest rates. So those interest rates are going to be going up all over the world, with the exception of those two economies that I mentioned earlier on. So we know what is going to happen, right? And so therefore we need to do something about it. And my mantra at the moment, and in fact it's always been my mantra ever since I started investing, is that we need to make money, save money, and grow money, right? Those are the three things we need to do. We need to make money. So if you're in a job, you're making money. If you're not in a job, then you are making money through the stock market. And I'm not talking about relying on share prices going up. I'm talking about real cash coming into your bank account. And as an income investor, I am making money because money is coming into my account. How do I save money? Well, you spend a little less than what you earn. That is one great way of saving money. Going around shopping for cheaper products, that's another way of doing it. And the other thing, of course, is to stop over trading. Because if you are buying and selling shares, hoping to catch the market bottoms, and then when there's a bear market squeeze, the share prices go up, you think you're going to be able to make some money, forget about that, because I think we're on some kind of downward trend at the moment, and share prices are going to be heading lower as a result of that gravity of interest rates. So I've covered make money, save money, and finally grow money. Look for those companies that have the ability to grow that payout, that dividend that you are hoping to receive. And if you do those three things, you'll be able to hopefully survive the next 2 years, because interest rates are going to go higher and remain higher for a long time. So higher for longer, I think, is something that we need to accept, and stop listening to those people that sort of say the Fed is going to pivot. The Fed is not going to pivot. We've said this time and time again on this show, Brian. The Fed is not about to pivot. And if you have a look at the interest rates at the moment, the Fed fund rate, and compare that to 9% inflation, well, you know, it's nowhere near controlling inflation, which is why Jerome Powell, the Fed chair, is warning people there is going to be a lot more pain. So just tighten your belts and focus on those investments that are able to generate cash for you. And that cash, I should be getting some dividends coming in today, Brian, and some tomorrow. And I certainly got some yesterday. So that cash flow is coming in. And that cash flow, whatever I don't need, I'm going to be putting back into the market again, looking for those companies that can grow that payout for me. If not in the next quarter, then certainly by this time next year, because we're going to be in this for the long haul.
Now, David, thank you very much for that sagely advice, and thanks for coming on this show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore. I'm Brian Fernandez, and we're on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.